Welcome back. The Nifty has breached the 17,000 level for the first time since the 28th of July. We are trading below 17,000 on the Nifty. And right now, as we speak, we are hovering at the 200-day moving average of 16,993. This is a very crucial technical level. So the market sell-off has intensified in the last 10 minutes. On your screen on the ticker, you can see all the big losers in the large cap space. Many of them have global linkages. Now the big question is, can India's resilience and outperformance sustain? That's going to be tested because year to date, the Nifty and the Sensex is still down just 2 to 3%, which compares with a 20 to 30% fall for the Wall Street indices. So the Indian markets have been ranked outperformers, but now in the context of the volatility, the global weakness that we're seeing, Indian markets outperformance is going to be tested. Also, globally, if you saw what was happening on Wall Street on Friday and what the commentators were saying, they're all watching if the United States indices, the US indices are going to breach the June lows. And for the Dow, the S&P 500, I think the June lows are just about 1.5% away. The current levels are just about 1.5% away from the June lows. But for the Indian markets, we're a good 12-13% higher than our June lows. That's the extent of outperformance in the last 3 months. And we're only down about 8.5% from our all-time high levels versus the Dow, which is now at a fresh 52-week low. So the big talking point is whether India can sustain its outperformance. The two big cues for this week, one will be the expiry on Thursday and the RBI policy on Friday. But let's shift our attention to the commodity space because there as well we're seeing some extraordinarily big moves. Manisha is here to talk about that. And Manisha, what a big slide and plunge in crude prices.
Oh, well, yes. Excuse me. Nima, on a day like this, the decline in US dollar perhaps, on any other day could be a supportive factor, but not today because today is all about a sell-off because when you look at the US dollar index, it's trading at a new 20-year highs and 114 seems to have breached as well. So we are looking at pressure coming in because of that as well. And as you said, yes, the kind of sell-off that we've seen in regional commodities, currencies, equity markets, that seems to be weighing on as well. So we started the day with kind of a flat move after that sell-off that we saw on Friday when the crude prices fell by 5%. But we don't seem to be holding off right now. So it's a new 8-month lows that we're looking at on the screen right now. Another percentage point gone on the lower side. After 5% on Friday, and when you look at the week itself, 7 to 8% of a decline is what we've seen in both the crude varieties there. And not just crude, that scene has actually been mirrored across other energy markets as well. Natural gas prices fell 11% in last week. You saw gasoline prices decline as well. And a month-on-month picture is no better because for last 4 weeks consecutively, you have seen decline come in for the energy markets and many of the other commodities as well. It's a complete sell-off that we are seeing in metals and gold and silver, agriculture commodities as well. And it's a slip over, or rather, it's a contagion impact that we are looking at across commodities. As I said, dollar index is one of the reasons for that. In last 1 week itself, we have seen near 3% of gain in dollar index. Many other Asian and international currencies hitting all-time lows really seem to be impacting as well. It's all about the fear that the rate hikes will continue. There are recession concerns as well. When you look at the economic data, whether in European Union or UK, we have seen a contraction in business activity. And that tells you that travel, inflation are some of the concerns that will continue to weigh on many of these commodities. For crude oil price, essentially, we will be watching out for the OPEC and allies meeting in the next week on whether or not they curb output to ensure that the prices are looking at support. Saudi Aramco is warning of underinvestment in case of crude because of the low oil prices and the unavailability that could be a result of that. And then the markets also are looking at the Chinese demand, which had just started to come in. But with China again headed for a week of holidays between 1st and 7th of October, markets do believe that you will be looking at exaggerated moves coming in for many of these commodities. Crude prices oversold on the charts right now, but with the momentum on the lower side, with everything declining, there is some more fall that can continue.
Manisha, thanks very much for bringing us up to speed on what's happening in the space of commodities. We're going to take a quick break. On the other side, the focus will shift once again to the market, and we'll talk about the technicals of trade with Ashish Kyal of Wave Strategy Advisors. Stay tuned.